Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. If you can hear me loud and clear, please say a hi to me in the chat. And if you are watching this on YouTube as well, just say a hi to me in the chat box as well. So as usual, today it is a Friday evening, 11:11. So do you guys do any shoppings on any of the e-commerce site? Do you have any kind of, shopping deals or not? 11/11 Singles Day, right? It is a very big event in China, okay? So let me take a look at the comments, okay? I'm very friendly. I won't bite, okay? So let me take a look at the comments. Hello, Wei Lun. Hello, Yulam, Dave, Amanda, Pauline, Mac, Christopher, Stephen, Mary, Mark, Chita, Pei Wen, Nelson, SP, Michelle, Kit Leong, James, FT Long, okay, Bokui, Michelle, Ket Mui, okay. So I think it has been 2 weeks since I last did a Facebook Live or YouTube streaming, because 2 weeks ago it was the Market Insights Virtual Summit. So I didn't do any Facebook Live, and last week I actually also didn't do because of the post-event summit booster with our stock god J-Tune, right? Okay, so it was a live physical event, face-to-face. It has been more than 2 years since you last did a face-to-face event. Okay, just a quick show of hand, right? How many of you actually attended the IG face-to-face booster summit last week? Please say, type me in the comments. See me in the comments. Okay, I see Benson. Okay, Benson was there. And I'm very happy to see some of you in person. For example, for those who introduce or come up to me and say hi to me, ask me questions. For example, like Wei Lun, Mark, Darius, Benson, and such, right? So Valerie and such, I'm very happy to see you guys in person. Yeah, Wei Lun, I see you. Pauline, do you say hi to me? I didn't. I can't remember. I didn't remember. All right. So, Kat Mui, okay. Thank you so much for supporting. Okay, and of course, okay. Yeah. So we are just starting this session only. I think there'll be more people. There'll be streaming in. Oh, Darius, you are here. Thanks for the shout out, Zach J. Okay, thank you. Okay. And right now we have about 150 plus in the room. I think there'll be more people streaming in. So both onto Facebook and also on YouTube. Please give me a like, share or comment, okay? Because this also tell Facebook and YouTube algo that you want to see more of our content in the future. Because if you do engage with me, okay, Facebook and YouTube will deem that you do not our content. In the future, you start showing lesser and lesser of our content on your feed already. Okay, so Zach J said, can you talk about the collapse of the FTX? I am actually not a native crypto native. I can share. I'm going to share a view, but I don't think I know a lot than some of the crypto gurus. Yeah, it's in my agenda. It's in my agenda. Okay, I'll share with you later. Okay, and of course you can see today. Okay, the session on the top right hand side of your screen, right? It is sponsored by Nasdaq. Yes, today's session is sponsored by Nasdaq, and I'm very happy, to invite, okay, Cher, to this session, because he is the APAC head of product and development, also the investment intelligence, and he's going to share with you the total view and also the market depth of Nasdaq. So without further ado, I will get Cher up onto the screen here. Let me try to add him right now. Okay, so Cher is on the stage right now. Can you guys see Cher? Cher, do you want to just say a hi to everyone?
Hi, everyone.
Yo,
Good
can you
evening.
guys see Cher and hear Cher? If you can hear, right, just type yes in the comments so that we know that everything is good, everything is well. Can see? Okay, fantastic. Yeah, okay, great. So today, right, Cher is going to present to you the Nasdaq total view and also the depth data, and it is the most complete market book with all the information you need to bring your investing decisions to the next level. So Cher, can I pass the stage to you and you just show your content to them? Is that okay?
Excellent. Thank you so much, Alex, for having me here tonight.
Welcome.
Yeah.
Okay.
Hello, everyone. My name is Cher, Head of APAC Products and Support in the Investment Intelligence Division. Great to be here with everyone tonight. And I'm so surprised at this time of the day, there's still over 100 people in this room.
Nearly 200 people right now.
Wow, gosh, I
186
think they are
people.
still streaming. No, amazing, amazing. This is my first time with the MarketWise Facebook Live, so it's indeed an honor. So yeah, without further ado, I think this is a part of Nasdaq ongoing investor education effort for the APAC investors. And today I'm going to share with you about the understanding of the depth data in the US market. There will be two parts of this. And for tonight, I'll be covering the US equity market structure as well as the trading sessions in the US market. So yeah, without further ado, I'll first touch on the US market structure. So
Sorry,
essentially,
are you able to expand your screen a little bit? I think it is a bit small.
Small, is it? Okay.
Yes, this is better. Yes, just now the expansion was pretty good.
Okay, sorry. So, oops. Yeah.
No worry. So Incher might not be so familiar with this platform. Give him a little bit of time, okay? No issues on that, okay?
Yeah.
So no worries, Incher, just try to share screen again. Anyway, while Incher is doing his, okay, let me see. Okay, can see already.
Okay.
I think this is much better, right? Okay, yeah.
Yeah, so where was I? So sorry, guys. Sorry, everyone. Yep.
No
worries.
Like
I said, the first slide, I'll move on to the first slide. Is it better? Can everyone see the slide?
I think it is still a little bit small, but it's okay. I think you can just present, on the content. Yeah.
So back to the US market structure. So unlike the APAC exchanges, like what you know about Singapore Exchange and Hong Kong Exchange, which has only one exchange in its market, in the US, there are 17 regulated trading exchanges. So yeah, why am I emphasizing the term trading exchanges? Because in US, only 5 of these 17 exchanges are listing exchanges. So for the purpose of understanding the depth data, only the on-exchange volume are being referenced to in my subsequent slides. So because for off-exchange trades, there's basically no order depth per se. So in US, approximately 60% of all shares are matched through one of these exchanges. The rest is basically, the rest of the 40% is basically traded off exchange via alternative trading systems, or ATS for short, single dealer platform, and other OTCs, brokers, and systems. So Nasdaq is the largest single pool of on-exchange liquidity measured on other the market share emerging over 15.7%. The next, I would say, comparing to other of our competitors or what the volume, it's at 8.8%. So we are essentially double the size, right? Moving on to the next slide, sorry. This slide, I would like to cover basically the trading sessions in the US market. As most of you may know, US market hours and trading hours include the pre-opening, regular trading hours, and after hours, right? So basically pre-opening covers from 8:04 a.m. Eastern Time to 9:30 a.m. Eastern Time. Regular trading hours is 9:30 to 4 p.m. Eastern Time, and after hours is essentially 4 p.m. to 8 p.m. Eastern Time. So very long trading hours, unlike what we see in the APAC, again, referencing to Singapore Exchange and Hong Kong Exchange. So there's also an auction period at pre-opening from 9:25 to 9:30 for 5 minutes, and pre-close between 3:50 to 4 p.m. So from the chart, you can see that majority of the trading volume occurs during the regular trading hours. And this is where the bid-ask spreads is the tightest. So yeah, more than 90% of the volume occurs during the regular trading hours. So I'm not sure whether everybody is aware of this, but yeah, I'm glad that I'm able to use this opportunity to share with everyone. And it is like suddenly everybody wakes up at 9:30 a.m. Eastern time and started trading and went to sleep at 4 p.m. after market close. So essentially, this is what the chart is showing. So the understanding of this sets the stage for the understanding of the depth data characteristics in the US market. Moving on now. To help better understand how the bid-ask spreads and dollar traded volume between different trading sessions in the US market, we utilize the Russell 1000 index component stocks as reference, right? So essentially, I think some of you may know that the Russell 1000 index represent the top 1,000 companies by market capitalization in the US market, using the depth data from two sources, basically Nasdaq and NYSE Arca as reference. So on the left-hand side, you can see that during the pre-opening and after hours, the spreads of the depth data is more than 200 basis points and 190 basis points respectively. So this is quite a wide spread for trading. When it comes to the regular trading hours, the bid-ask spread suddenly shrunk to 12 basis points and 25 basis points respectively between Nasdaq and NYSE Arca depth data. So as you all know, whoever that have experience in trading, the tighter the spreads begets better trading volume. So on the right-hand side, it is evident that the dollar traded value is higher during regular trading hours, and Nasdaq has far better dollar traded volume during the trading day. So at this point, I would also like to take this opportunity to share that that trading in the pre and post market is riskier due to the low participation and price volatility. To summarize, we can see that better spreads bring better trading volume, and Nasdaq has the majority of this trading volume. Also, most of the trading activities occurs during trading hours, and it's like, as I mentioned earlier, US suddenly wakes up at 9:30 and goes to sleep at 4 p.m. On this note, I would like to conclude part one of my presentation on the understanding of depth data. So stay tuned for part two in MarketWise Facebook Live going forward. Last but not least, if you are looking for more content in the US market, feel free to visit this website. Thank you, everyone, for listening.
All right, so thank you, Incher, for your presentation on the Nasdaq TotalView over here. And he will continue the second part next week. Okay, so as mentioned, this is sponsored by Nasdaq. And once again, thank you, Incher, for your presentation. And for those who just joined us, Incher is actually the APAC Head of Products and Support Investment Intelligence, and he mentioned about the Nasdaq TotalView and that data. And for next week, he'll continue with the part two. And once again, thank you, Incher, for your sharing. Okay, so we'll see you again next Friday. Is that okay?
Thank you so much, Alex, for having me here again.
Yeah, so yeah, I think it's time for you to go to bed. I think it's pretty late for you already. Thank you for staying so late to attend this session with us together. All right. So yeah, so Incher, you want to you can just click the yeah, that's fine. Yeah, you can just exit this. Thank you so much, Incher. Okay, so all right. So once again, thank you, Incher, for the Nasdaq introduction on the Nasdaq TotalView. Let me just post the link. Okay, so pardon, I'm sorry because it is the first time he's doing this, so I think he has some difficulty in sharing the slide, but nevertheless, I'll post the Nasdaq TotalView in the link. Okay, so without further ado, let's continue with this session tonight over here. Let me just share the screen. Let me share the screen over here. Okay, yeah. All right, so let me try to zoom in here. In a moment, All right, it has been like 2 weeks since I did my Facebook Live. I a bit don't know what to do. Okay. All right. So, okay. Yeah. So disclaimer first. Whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell over here. my opinion doesn't mean that I'm right. So please do your own due diligence. All right. Yeah, so Mary, the slide is very small, but nevertheless, basically, I posted the link over here. You can see more of the content over here. No worries on that. Okay. All right. So yeah, so of course, the Market Insights Virtual Summit is already over. Okay, so before I go into that, please subscribe to our Telegram channel, YouTube channel. Okay, for those who are already very familiar with me, okay, you should have already subscribed to these two channels over here. But today I'm going to share with you something that is new over here. Okay, as mentioned by IG previously during the Summit Booster, I do have a free course over here, the Insider course to technical trading, and this is a free course to you guys. How many interested? How many of you are interested to have this course? Anyway, this is free, okay. I'll post the link in the comments, in the chat. Just tag me. Are you excited? Okay. So many a times, okay, people ask me, hey Alex, I forget this about this, I forget about that. Can you share? Can you please share more on what's being covered on your Facebook Live and such, right? So this is the one that I'm going to share with you. Okay, so this is the Insider course to technical trading. All right, can just read it yourself. Basically, there are 11 video modules over here. So just a very quick walkthrough. Okay, investing versus trading, what's the difference? Okay, the 4 different types of traders and time frame, the 4 different stages of a market cycle are trend analysis, okay, how to spot the trend in just 3 seconds using the Ichimoku cloud. Support, resistance, don't draw lines, use this thread, okay, use this instead, okay, this is basically the pivot points, okay, the key moving averages to use on your charts, the number 1 candlestick pattern that you should stay away from. Later, I will cover that as well, okay, how to follow the smart money and spot trading markets, how to uncover the trend, condition, breadth, and sentiment in one glance, how to manage your risk and protect capital, and how to get started. So it's very simple. All you have to do is just go to the site, okay, just click enroll now, whatever button they can see, okay, on the site, just click enroll and just register and you are good to go. All right, so this is an on-demand video module. Anytime, okay, you feel that you want to repeat again, you want to rewatch again, you can rewatch, okay, no issues on that. So let me just share the link in the comments. Let me just share the link in the comments. Okay, so enough of that. So back to the CPI. Okay, of course, CPI, again, it is old news yesterday. Okay, so yesterday market has a monster rally. Okay, the Nasdaq was up 7%. The S&P was up 5%. Of course, why did the market rally? Of course, the narrative, the answer, okay, to that is because the CPI, the consumer price index, okay, dropped. Okay, so the inflation rate year to year, all right, forecast was 8%, but the actual number is just 7.7%. The core inflation rate forecast was 6.5, it is 6.3%. So in case you wanted to know where I get all this data, I think somebody asked in the Telegram channel. Okay, so this is the link. I'll post it in the comments also from Daily FX. Daily FX is also brought to you by IG as well. So this was the yesterday. You can see that over here. This is the number. Oh, this is where I get the number over here. Okay, main core team by no results found. You mean the course? I think should be working. I posted it. It is working well. All right. Anybody have difficulty getting to this site? No records found. Okay, how about I try this direct link? Try this direct link over here. Okay, I posted the link in the comments. Try this direct link over here. All right. Okay, can So this is the chart that I want to share with you over here. This one, okay, nothing much. Okay, basically this is just the CPI inflation. So you can see that the overall inflation has kind of sort of peaked. I've been saying that for many weeks, right? For many weeks. Of course, I can't be sure to tell you that the inflation has peaked, okay? But based on what I see on the commodity prices and everything, okay, DBC and everything, the oil prices, the gasoline prices, natural gas prices, all has been coming down. The grains have been coming down as well. So naturally, okay, I feel that it should come down. Of course, this is already proven that it is coming down. Of course, Whether in the future it will continue to go higher, we shall see. But right now, it really seems that inflation has peaked, and that is what causing the market to go down. All right, so no results found, no record found, as in the site, no record found. I mean, for the insider cost, is it? Cannot be, leh. I tried. Okay, leh. Yeah, it's working. It's working fine on my side over here. Okay, never mind. Okay, I think it is okay. I shall see what's the issue over here, but it's working on my side. Maybe you guys can try later on and see whether it works on your side. Okay, on your side over here. All right, so this is the CPI agency is working, right? I'm not sure why some of you is not working. Okay, again, never mind. Try later. I think it should be working. Okay, I post the link again. I'll post this link. Direct link, it is okay. Try the direct link over here. Try the direct link over here. All right, so I'll move on. Okay, I'll move on. All right, so midterm election over here, the S&P has historically outperformed the market in the 12 months period after a midterm election. This one I also mentioned before. Historically, after the midterm election, okay, 100% record, okay, it is positive all the time. Of course, some people, some of the bears will say that, hey, this time is different. We are in a high interest rate environment. Okay, this is different. There's a quantitative tightening and such. Okay, this time could be different. Yes, it could be different, but based on historical record, has been always like this. Okay, and of course, the reason typically why it tends to outperform. Okay, the narrative is that given that when everything is clear, the market is sure who is going to in charge of certain Senate and also the House, right? Then the market doesn't get surprises. Basically, when the investors, traders don't know who's going to be in charge, okay, who has won more seat or what, right? They tend to feel a bit more jittery. So everything is clear, everything is, results has been over already, then the market tend to perform because market doesn't like surprises. And the US fiscal policy may change after the 2022, but generally I think shouldn't change much. Okay, so this is the chart that I'm going to show you over here. Okay, is it this one? Yeah, okay, this is the one over here. All right, so I think it's a little bit small. Let me try to zoom in. All right, so you can see ever since 1962, the midterm, right, and show you all the way 100% record. Okay, it is positive. Generally, okay, average, right, midterm average, okay, 1 year, 12 months, 1 year, right, it outperformed, as in it give you a return of 16.3%, and just 3 months, even 3 months, right, there's also a return of 7.3%. In fact, right, yesterday Nasdaq return already give more than 7% already, right? Less than 3 months, just 1 day. 7%. So yeah, this is the historical data on that. So whether you want to believe or not, okay, at the end of the day, we still has to go back to the price action. Okay, so far price action seems okay to me. Okay, and at the end of the day, we are also into October, November, December. Of course, October just finished into November and December, and generally November and December, it is a bullish month, coupled with the fact that we are into the midterm election. It is also a very bullish, year also. So we shall see. I'll go through with you the chart later on. Okay. All right. So I think this is good. Okay. If everything is okay so far, just type okay in the comments. I'll just type okay in the comments. All right. Type okay in the comments. Okay. Let me take a sip of water over here. So of course, I'm going to cover this crypto crisis over here now regarding the FTX thing, right? I believe if you have been following the market, you should now know that the biggest news of the week is this FTX collapse. Okay, FTX collapse here. Okay, so of course it started with CZ, the CEO of Binance, wanting to dump all the FTX token that is FTT. Okay. By the way, I am not a crypto native. So my explanation or the way I present it, or maybe I might not get the full picture. So please bear with me. If I'm wrong, okay, you can correct me as well. All right. So by the way, how many of you actually have quite a bit of fun inside the FTX, as in you didn't withdraw. Okay, I don't know whether this is really painful for you or not, but I think it looks like it is a gone case for now. Okay, it is heading into bankruptcy. And the latest news I read from Twitter that is preparing for Chapter 11 bankruptcy. Okay, so the possibility of getting back the money, it is very 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 small now. Okay, all right. So yeah, just want to share with you that the whole saga, it is because I believe CZ know that there's some fishy business between Alameda. Alameda is actually FTX sister company, which is essentially a hedge fund, and after that it becomes a market maker and also kind of it basically is a sister company. It does market making and it's also hedge fund. Joshua said already filed for Chapter 11 already. Okay, thank you for comments. Okay, so why all this saga started is because, by the way, let you know first, Alameda started before FTX. Okay, so Alameda came first before FTX is around. So when FBF, the founder of FTX, started FTX, right, he started Alameda first. So it is essentially a crypto hedge fund, and after that pivoted to become a market maker. Okay, and subsequently, due to the arbitrage opportunity getting lesser and such, right? So they want to continue to make more money. Okay, I think the being creating a exchange came to his mind, and FTX was born. But the fishy business is because FTX buy or pre-mine FTT at a super low price, which means that essentially they get the token for free lah. Okay, which means that they bought at a very low price, get the token for free, and then FTX pump FTT the token. So essentially, own self sell own self. You get what I'm trying to say, right? In Singlish terms, that 自己讲自己的. So I have this asset. Okay, I pump into Alameda. How much money, how much asset that I have is based on how much FTX pump FTT. Okay, so after that, Alameda posts FTT back to FTX as collateral. Okay, and using this collateral, they borrow real money. Okay, from FTX customer deposit. Essentially, it is telling you that it is not segregated. Okay, they use the collateral, which is FTT. Okay, and borrow and get the money from FTX customer deposit, which is your money. Technically, I think it shouldn't be done like this. It should be segregated. And fishy is because FTT is FTX own collateral ma. Okay, it's like own self buy own self like that. Okay, all right. And then FTT has a remarkable low circulating liquidity relative to Alameda and FTX holding. In other words, right? Okay, if Alameda wanted to sell everything of the FTT that it had, okay, there wouldn't be enough buyers. And that's the reason, okay, why FTT collapsed, okay? And Alameda holding represented 2 to 3 times the FTT token circulating supply. And that's the reason when Binance started to dump all the FTT, the token, right, FTX token, okay, it doesn't have the liquidity to absorb everything. Okay, that's the reason is eventually it failed. All right. So that's the whole gist of the story. Okay, I think I might not do a great job in explaining this, but essentially, okay, I think, okay, it doesn't have a great impact on the equities market. Of course, if you are in the crypto scene, of course, this is a very shocking news. And right now, you can see that the crypto BTC, the Bitcoin, and the Ethereum is down again 4% and 3%. All right, and this tells you how unregulated the crypto market is. Imagine, okay, the second biggest crypto exchange can fail. It is not like third tier, fourth tier crypto exchange. This is like the second or the third biggest crypto exchange. It is like telling me, okay, DBS, dumping UOB share, okay, and UOB collapse. because there's not enough liquidity, there's a bank run and such. So it's as serious as this. So I think in these cases, right, this will shaken the crypto people, investors a lot. It might take some time, okay, for crypto prices to recover. All right, this is unlike like 3AC and hold or not, like third tier, fourth tier, that kind of lending, third party kind of thing. This is an exchange, this is an exchange. And there are some, okay, so ZJ said that during stable coin like USDT, USDC will be affected. This one I'm not very sure. As I mentioned, I'm not a crypto native, but what I heard from the Twitter is that certain exchanges, for example, I don't know how true is that, okay, don't quote me, right? For example, like crypto.com or qcoin.com, all these have some significant exposure to FTX, and if all this goes down, then I mean that USDT and USDC, all this might go as well, okay. Of course, I don't know how much exposure Coinbase has to FTX as well. Nobody knows everything, okay. And of course, you need to understand that FTX, when it first started this saga, right, as FBF, okay, Sam Bankman-Fried said that the assets are okay, but the fact that it is not okay, it is not okay. So yeah, so eventually, if Coinbase, crypto, they all say okay, but at the back of the scene, it could not be okay. So you guys have to be very careful. Again, right now, my view is that if you have any tokens, any coins, any stable coins on any exchanges, or any exchanges, you can draw them out and store them at your own hard wallet. So for me, example, okay, most of the tokens that I have, is inside my hard wallet. I store them as myself. I don't store them at a third party custodian, which is like the exchange. All right, C5, okay, centralized exchange like Binance or FTX. And I have some exposure of the coins into Qcoin, which I haven't took out yet. So I might want to take out also, because Qcoin is one of the exchanges, that is rumored to have some exposure, okay, to this FTX. All right. So Wei is asking, right, BTC, ETH, and TKX. This one I'm not sure. For tokenized, okay, the news I heard is that they do not have much, they do have exposure to all this, so I think that is fine. But don't quote me, okay. So please do your own due diligence. Please do your own due diligence. The hard wallet that I have is actually I'm not sure if you can see it or not. It's SafePal. So this is where I store all my coins. So this is a hard wallet. There are many other hard wallet. You can just Google. You can just see how it deem fit to you lah. Okay, there's no best. I think as long as you can store, I think this is good enough. All right. So yeah. So I think I'll just go back to the things that I know best. Okay, that is the equities market, the stock market as well. So moving on, let's go to the stock market, shall we? All right. So there are a few things that I want to talk to you, okay, on the dollar index, on the bonds. Okay, it's all interlinked, and market internals, and also the market breadth as well. So later on, I will share with you some of the trade ideas, the sectors and industry that I am looking at. Okay, these are the things that I know best. Okay, I know best. All right. So looking at the index, let's see how it goes right now. Okay. So, okay, the index Nasdaq. Okay, Nasdaq, when the market first opened, it was like negative. Okay, now it's up 1.16%. S&P 500 is up about 0.5%. Okay, Dow, some divergence over there. It is Dow Jones is down 0.4%. Hey, by the way, all right, the chart that I'm showing you right now on this chart, okay, I think you guys can see lah. Okay, interesting. This is Poland ETF. All right. Based on this chart, right, do you guys think it is in a uptrend or in a downtrend? Before I go into the chart, okay, just now I was researching some of the stock ideas and see some of the ETF sectors that was moving. Okay, and Poland comes into the picture. So yeah, Poland ETF. Is it down or up? All right, is it down? Why soon say it's down? Why soon say it's down? Any other comments or not? And anyway, not recommendation to trade. I'm just sharing with you. Later I'll share with you. I hope I have the time. Down, 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 uptrend, down, down, down. Okay, what if? Okay, what if? I think I'm just talking more instead of the index. Since I'm here, already just talk about that. Okay, so what if I put in the cloud and the CPR? What I can share with you, is it up or down now? If I add in the cloud and CPR, all right. Okay, it is above the cloud based on my way of reading chart. Okay, if price is above the cloud, if price is above the central pivot range, it is on an uptrend to me. All right. So again, this is not recommendation to tell to buy or sell. I'm just sharing with you what I see. Okay, interesting. Right, 2-day time frame. But we are hitting the resistance sooner, or even in the weekly time frame. A longer term time frame, we are still in a downtrend. Okay, we are still in a downtrend. Overall, still in a downtrend. But short to mid term wise, on the daily time frame, it looks pretty interesting. Okay, it looks pretty interesting over here, right? I think there might be more room to go higher, but of course not to chase now. Price will come back a little bit and then go higher. So we shall see how it goes. Later I'll show you how I get all these, moving sectors and ETF. Moving sectors and ETF. By the way, once you read this, you study this course, you should also know how I get all these moving sectors and ETF as well. All right. So talking about that, okay. So let's go to the S&P 500. So let's go to S&P 500. Okay, interesting. Okay, so a naked chart, as I mentioned, can be a bit difficult. You can draw a trend line to see whether it's moving up or down, that kind of. Okay, if you draw a trend line, then it is, got still some room to go. Might be hitting the trend line pretty soon. But normally, I usually don't draw trend line. I do lah, but not so short. More of a longer term time frame, like what I did on this trend over there on the weekly time frame lah. Okay, like that, something like that lah. So can you see over here? This is a very long-term trend line over here. All right, can you see price? Ping pong, goes back up again. Okay, and then retest this trend line over here. Basically, this is just an extension of the trend line over here. All right, so it's touching here. So this is exactly, you zoom back to the daily time frame. This is exactly the blue line over here lah. So if you add in my usual indicators over here, all right. So this is the Facebook Live indicator over here. Okay. All right. The S&P, all right. We are right now above the central pivot range. All right, and we are also breaking above the cloud over here. Okay, so the things looks a little bit more rosy. Okay, for Nasdaq, we are also above the central pivot range for this month. Okay, still below the cloud. All right, for the Dow is actually the strongest among the three indices. All right, can see that price has broken above the cloud already, and the central pivot range has been acting as a support right now. Okay, so short term, mid term, things looks pretty okay. But I want to stress that we are overall still in a downtrend. We are still overall in a downtrend. Okay. If you understand what I'm trying to say, overall in a downtrend, just type BT in the comments. Okay. I don't want people to get mistaken. Say, hey, Alex said it is in an uptrend. Overall, we are still in a downtrend. Why? Because if you look at the weekly time frame, okay, longer term time frame now, okay, we are still below the cloud. We are still below the cloud. Okay. All right. For Nasdaq, we are also still below the cloud. So overall, longer term wise, we are still in a downtrend. It's just that short term wise, okay, price show some promising price action. All right, above the cloud and above the central pivot. So potentially, okay, November, December, it could be more bullish. We shall see. Of course, you know, the market is still pretty divided. You know, if you read on Twitter or if you go to Facebook or your YouTube, there are people who say that, you know, we are still in a bear market. All right, this is just a this is just a bear market rally. And of course, there are people who say, hey, we are out of the bear market, we are in a bull market right now. Okay, so again, just a very quick consensus over here. All right, how many of you think that, you know, we are already in a bull market right now? Okay, all right, so within the next how was it, within the next 6 months or 6 months or so, price will go much higher? Or you think that we are in a still in a bear market, within the next 6 months we are even to go even lower, within the next 6 months even go even lower? 6 months, 6 months, so until maybe about April, May next year. So if you are bull, just type bull. If you are bear, just type bear. You are in the bull camp or in the bear camp. Again, your consensus is pretty important to me, so at least I know what you guys are thinking. All right, so bear, bull. Christopher said bear within 6 months. Well, judging from the consensus, it seems that it is pretty mixed. You guys can see, right? Can see the comments yourself. All right, so it is 50-50. It is really kind of 50-50. Some bear, some bull, some bear, some bull. All right, so as I mentioned during the booster summit, right, I have no freaking idea where the market is going to go. Okay, but within the until the end of the year, all right, until December, my personal take is that, you know, the market might go higher. Of course, go higher doesn't mean that you're going to touch it's going to touch the high again. Okay, I'm not stating that. I'm just saying that, you know, until December, price might go like that or something like that. Okay, something like that. Okay, so this is my personal view. Subsequently, we will have to see the price action later on. But overall, okay, longer term time frame, we are still in a downtrend. Weekly time frame, we're still in a downtrend. Okay, do you remember what I said? I think many Facebook Live ago, I said that, you know, I said that, all right, in order for me, you know, to be more bullish, okay, price has to be above the central pivot range for 2 consecutive months. Right? So for those who are new to me, don't know what I'm talking about, okay, what is central pivot range and such, right? You can, you know, go and walk through this insider course. All right. So central pivot range is essentially the green things, the green lines that you see on the chart lah. So price has to be, where did I put? Price to be above the central pivot range for 2 consecutive months. I think I repeat a lot of times already. Okay. So just central pivot range. So sorry if I keep repeating. I think there are some people who don't know. Okay, just let me repeat for 5 minutes. Okay, so can you see that, you know, during the COVID sell-off over here, all right, so price above the CPR for 2 consecutive months, okay, then the market will generally move higher onwards. You can see that overall, you know, when it's an uptrend, the CPR will be acting as a support lah, okay, that kind of thing. Okay, I'll just go through very quickly. Again, the correction in 2018, 2019, all right, price above the central pivot range, 2 consecutive months, must close above the central pivot range for 2 consecutive months. All right, you go up. Okay, there are a lot more examples over here. Right, so can you see over here, 2 consecutive months, okay, and then price will go higher. All right, so very important here. All right, so let's say I think there's a very high chance, I think so, okay, there's a high chance that the S&P 500, all right, will close above the central pivot range this month. Okay, all right. Okay, last month is not counted. Last month it is not counted. Do you know the reason why? All right, it seems that it is breaking above the CPR, but it is not. It actually closed, okay, below the CPR. I think so, okay. All right, yeah. All right, close below CPR. So this is if this month is actually the first month that you close above the central pivot range, if it closes lah, which means that 2 consecutive months, let's say for example, next month, all right, the CPR is something like that, okay, close like that, okay, then we say that, hey, price has closed above the CPR for 2 consecutive months, which means that, okay, the earliest you can buy and hold for a longer term period of time is in January, the earliest, okay, you want to take action, it is in January. Just type January, Jan in the comments. So overall, we are still in a downtrend. Let's say price very bullish, price stay above the central pivot range for 2 consecutive months. This month, November, next month, December, 2 consecutive months above the CPR. Then January is the time that you can consider to buy, to go long. All right, so this is my take. So right now, if you want to go long for a longer term, I think this is still not right time. But of course, for shorter term, buy, sell, swing trade, no issue. Okay, can All right, so I think a lot of you guys, okay, I think online also people are saying that, hey, it is still a bear market rally. It is still a bear market rally because we have not seen a capitulation yet. There's still don't have the kind of very sharp sell off. And the VIX. Okay, and people are always saying that the VIX, the fear index, the VIX, right, still didn't spike. Okay, still didn't spike. Okay, you can see that a lot of times when market crashes, when there's a capitulation meaning that people surrender, people all gave up. Those who want to sell have sold, so they all gave up. Only when all the people gave up, okay, then the market will turn into a bull market. Okay, so there's still no capitulation yet. So the bears are saying that, hey, VIX is still still at a pretty relatively a low level yet. It still haven't spiked yet. So they are waiting for the spike. Okay. But I didn't get the chart. But do you realize that I think there's some data showing that the put call ratio, it is at the highest level, okay, even comparing to the COVID sell-off, COVID crash, it is at the highest level. So which means that a lot of people, retail or institution, they are hedged. They are hedged. All right. So when they are hedged, okay, I'm not sure you can understand or not. When they are hedged, okay, when they are properly hedged already, okay, when the market come crashing down, they do not have so much fear because either they are hedged ready or they are making a profit. Okay, I'm not sure if you can understand. If you understand what I'm trying to say, okay, just type yes in the comments. Okay, this is my personal view. Okay, so I don't think we might see a spike in the VIX if the put call ratio it is at a very elevated level. All right. Okay, so in fact, the capitulation that that the traders and investors want to see in the equities market, for example, the S&P 500, okay, the things that they wanted to see, okay, the capitulation, the surrender of, okay, the traders and investors give up, that kind of thing, the capitulation like that, it is not that. It is actually in the treasury bonds. Okay, I think I mentioned during the summit booster when some people have a small chat session. So the bonds market over here. Oops, where is it? All right. Yeah, so can you see this is the 30 years treasury bonds. I'll just present a naked chart. So, of course, starting, okay, it is just like a normal sell-off, and then it gets steeper, and then it kind of get, the capitulation. Okay, it is like nearly to 90-degree sharp sell-off, and no asset classes, can continue to dive, parabolic, or this is a parabolic down continuously. Okay, all right. It cannot move. It cannot just go on like this forever. Okay? You get what I'm trying to say? No? You get what I'm trying to say? If the bonds continue to go like this, which means that the yield you go to 5%, 7%, 8%, 10%, that kind of thing. So it cannot go down like this. So in fact, the capitalization happened in the bonds market, and all these are kind of interlinked. So do you guys remember what is the cause of the equities sell-off? What's the cause of the equity sell-off? Why is stocks, crashing? Why is the stock crashing? What's the reason? What's the narrative given that why stocks are crashing? Can you guys just entertain me? Just type anything in the comments, or I take a sip of water. So first, understand why do stock crashes in the first place? Why did stock crash in the first place? All right. Interest rate, yes, correct. Thank you, Mary and Payment, for entertaining me. Okay, yeah, because of inflation, right? Because of inflation. So the market crashes because of inflation, and because of inflation, the Federal Reserve, has to increase the interest rate, right? And by increasing the interest rate, okay, that spooked the whole market, and that causes the market to crash for the whole year 2022. So inflation is the cause. So what did Fed do? Increase interest rate. Okay, increase interest rate, increase interest rate. So the yield interest rate is the cause of the stock market crash. Okay, so you guys can understand that the yield or the interest rate, is the root cause of the stock market crash. So interest rate yield is very related to bonds, right? So very related to bonds, right? So as I mentioned, like, okay, the 30 years treasury bonds, longer term treasury bonds. So what happened if the bonds market capitulated, okay, and start to reverse higher? So what will happen if the bonds market, all right, bond price reverse back higher? What will happen to the yield? All right, the yield will drop, right? The yield will drop, right? All right, and the yield drop, what will happen to the equities market? You'll be more bullish, right? Because higher yield was the reason, higher interest rate was the reason why the stock market crashes, Okay, so if lower yield, if it makes sense, okay, interest rate go down, that will cause the market to go higher. Am I right to say that? Am I right to say that? And okay, previously when the interest rate goes up, right? Okay, what goes up parabolically? Okay, sorry, hard to pronounce. Okay, what goes up parabolic? Okay, it is also the dollar index, right? It is also the dollar index, right? Over here, all right, because of the continuous interest rate hike, okay, and that benefits the US dollar, okay, because interest rate hiking will cause the US dollar to appreciate, especially when the US is increasing interest rate at a higher pace than the other countries like the Europe or the Japanese or the Japan or other countries. Okay, so the US dollar has a very amazing rise up, right? Okay, so as I mentioned in the Telegram, it seems that the dollar index has also reached a peak already. Okay, and if the interest rate comes down, okay, the dollar will also come down as well. All right, so if the dollar come down, okay, that will make the stock market to be rally as well. Do you get what I'm trying to say? Okay, the intermarket analysis. I think the way I explain, still not the best, but you get the idea, okay? So I'm not the best, okay, but I'm not the best to explain very well in words, but you guys can get what I'm trying to say, right? So it all gets interrelated, intermarket analysis. Okay, all right. So as I mentioned in my previous Facebook Live, right, I was watching the dollar index. So the dollar index was actually looking very kind of weak, like very toppish to me. All right, very toppish. So let me add in my usual indicator, then it can show you what happened. Okay, so this is the dollar index. All right, so can you guys see what is happening right now? Okay, all right, so before I go to that, let me go through the Telegram channel over here. Okay, so Again, do subscribe to our Telegram channel. See over here. All right, so I mentioned over here, right? I think on the 1st of November, I think more than 1 week ago, okay, more than 1 week ago, I said that, you know, I didn't explicitly say that I shorted the US dollar lah, okay? I said that look at the dollar yen, all right? So this is the pin bar over here, all right? Pin bar, okay? Hammer candlestick, the number one candlestick pattern I don't like to trade, okay? So this was the prior resistance, okay? Broke up, turn support, and people go long over here. So I mentioned that, you know, this could be a potential classic pin bar trap, all right? Amateur traders see this hammer candlestick as a support zone, and then they buy, they go long, okay? Price goes up a little bit higher and reverse back down. So there's a good chance that price will go down to the low of that hammer candlestick. This is where most traders put their stop loss, you know, because this is where all the liquidity are, all right? Okay, so my opinion, no advice to trade. I could be wrong, so I mentioned that. But in fact, actually, I shorted the dollar yen. All right, so go back to the dollar yen over here before I go back to USD. So this is the dollar yen. All right, so okay, so can you see previously the dollar yen, because the yen, the Japanese is not increasing interest rate, okay, and the US dollar is increasing interest rate. So this will cause the dollar to appreciate at a very fast pace. It is going to be very trendy. So can you see that since 2022, okay, the market just goes up all the way, and most of the time it is above the central pivot range. Of course, there's one time it is below, but the cloud is acting as a support and then goes back up again. Okay, and right now, all right, can you see is price above the central pivot range or below the central pivot range over here? All right, the answer is very clear. Okay, I don't want to waste your time. So price, it is actually below the central pivot range, and this is one first telltale sign that tells you that the dollar, it is not that strong anymore. Okay, it is okay at this point in time, like that. At this point in time, okay, it is telling you that price is not that strong anymore. All right, can understand? Because price is below the CPR. If you can understand, again, just type yes in the comments. Engage with me, entertain me, so that I know that you understand what I'm trying to say. Okay, price is below the CPR. All right, subsequently, price, as I mentioned, right, tested the hammer candlestick pattern and boom, go down, right? Okay, all right. And do you realize that, okay, this movement doesn't look, this whole price action candlestick go down doesn't look very much the same like the previous one. All right, previous one is like, oh, you know, very controlled, that kind, shallow pullback, a little bit steeper, okay, but it still seems okay to me. All right, but this is a very, very sharp sell off over here. Okay, this tells me that the price action doesn't seem very right already, and that could potentially be the turning point, reversal. All right, so as of now, for dollar yen, okay, it is still above the cloud. Okay, which means that, you know, when price hit about 138, okay, I am expecting there could be some form of rebound, all right, before price goes back down. Okay, most likely, I believe so. Okay, this is my opinion, because the dollar index itself, the XY, all right, what do you guys see? Okay, what do you guys see right now? What do you guys see? Is it on an uptrend or is it in a downtrend? Is it below the cloud or is it above the cloud? Once again, you know, just entertain me. Let me know your answers. Is it below the cloud or above the cloud? You look at the trend. Since 2022, okay? Since 2022, very nice uptrend. All right. Very nice uptrend. So yes, thank you guys for the comments. It is below the cloud, below the central pivot range already. So this tells me that the dollar is not strong anymore, and this could have, the dollar might have peaked already. And if the dollar peak, okay, this might boost the equities market, which is the stock market. So for the past year, the dollar index and the equities market, the stock market has an inverse relationship, which means that when the dollar is up, okay, the stock market is down. So you can add in for a comparison. Let's add in like SPY. Okay, so new price key over here. All right, so can you see that generally since the start of the year, this is the start of the year, okay, when the dollar index is up, okay, the equities market is coming down. So there's a inverse relationship. All right, so when the dollar is going down, okay, that might boost the equities market into going higher. All right, so I think you guys can get the relationship. And of course, it also links back to the 30 years treasury bonds. Okay, all these bonds market, it seems like, it is starting to go higher as well. All right, so a reversal. Okay, so if everything, you guys can understand what I'm trying to say, everything linking together. Okay, why I think there's a potential that the equities market can go higher because of the bonds market and the and the dollar index. Okay, just type OK in the comments. Just type OK. So I think I go into this for too long already. Okay, now it's already 1 hour, 1 hour and 4 minutes already. Okay, is it okay if I continue for maybe another 15 or 15 minutes or so? All right, to share with you guys. All right, can or not? All right. Okay, so if you are tired, okay, please go ahead. You can go and sleep. So I will still stay on for about 15 to 20 minutes. Okay, so I'm going to share with you these market internals as well. Okay, so as I mentioned on my Telegram channel over here, I promised I will share with you, right? So previously I said that okay, this is yesterday or 2 days ago, or yesterday, right? Okay, the VVIX ratio gave some clue that the market is okay or the indices plunge. The VVIX ratio surge. Let's see if the market can hold up when the market opens later. All right, so okay, let me go through the chart over here. So this is the VVIX over here. So this, okay, I will do this. Okay, I'll do this. Okay, this is the VVIX over here. Oops. Okay, I don't know how to present the data. My trading view seems to be laggy. Okay, let's go through here first. All right, okay. So okay, remember, okay, let's go to S&P 500. Okay, the day before the CPI data is released, okay, yesterday, this was a very bearish candle. This candle over here, okay, this candle over here. So in fact the S&P is down 2%. So essentially, all the bears were coming in and say, hey, I told you already. Okay, the market, this is a suckers bear market rally. The market, it is going to go down again. This is what they shouted out, okay, because of this big candle over here the day before the CPI, of course, before the CPI data is out, and of course the crypto crisis, the FTX thingy lah. But okay, you can see that on the 9th of November, the VVIX, the 9th of November, okay, can you see that the VVIX is actually up. The VVIX is actually up, okay, kept up very high, okay, it is in fact up. It was up 4%. It was up 4%, 4.3%. All right, 4.3%. This give me the clue that, you know, actually the market is okay. Seems okay to me. So I was thinking that who is telling lie? Okay, is the S&P telling lie or the VIX ratio telling me a lie? So which one is the correct one? So eventually, okay, VIX is telling the truth lah. Eventually, the market, you know, continue to surge higher. All right. So again, do you guys remember? I think a few weeks back before the Market Insights Virtual Summit that I said that I have this star signal over here. I have this star signal. Anybody can remember or not? If you can remember, just type me in the comment. I said that, you know, my proprietary signal over here, there was a star signal over here, there was a star signal over here, and there was a star signal over here, which means that when this is a star signal, when the VIX goes up, there's a potential, you know, things that this means that potentially that the market can go higher, because this is like the overbought and oversold. This is when the market is at, then when the VIX is at the low, okay, the market is in a fearful state. When VIX is at the high, the ratio, the market is in a complacent state, right? So, all right, pretty accurate, right? Oops, pretty accurate, right? So, this has proven to be right as well. The market actually, the VIX ratio go higher, which in turn lead the equities market to go higher as well. All right. So if you do the ratio over here, VIX ratio over here. Okay. Yeah. So this has potentially spot the bottom for the equities market. So I hope you guys, some of you guys, caught some good stocks, good counters to trade. Okay, so personally, I have did a few trades, and I think pretty okay, pretty well, good profits over here. All right. Marcus is saying how to set the star indicator. Okay, this is my proprietary indicator lah. I won't review lah. Okay, this is my proprietary indicator. Right. So far, there still isn't any signal yet lah. Okay. So yes, so this is how I caught the bottom over here pretty well. So today, in fact, today the VIX it is also up as well. Today is up 1.35%. Okay. So let's say, for example, if the VIX is up 1.35%, while the index is down, this also tells me that, hey, the market, I think still okay lah. I think still okay. All right, still okay. So right now, today the market is quite volatile. It's fluctuating. Just now it was up 1%. Now it's back to 0.3%. All right. So Ken, so that's all for this market internals and market breadth. Okay, market breadth. I just do a very quick one over here. Okay, market breadth. The percentage of stocks above the moving average over here. Market breadth. Okay, we are somewhere near short to mid-term top. Okay, the reason why I say so is because, where is it? Breadth. Okay, market breadth here. Percentage of stocks, okay, above the 50 days moving average. All right, so I remove this. Okay, so again, you can treat this as a support, not support, overbought and oversold region. So can you see that every time, you know, price as in when it hit about 90+% level, which means that out of the 500 stocks, okay, 93% it is above the 50 days moving average. It could mean a short to mid-term top over here. All right. So at this point in time, okay, we are still not at the top yet. Okay, we are at about the 80%. So which means that there's a potential chance that the market still can go a little bit higher. Okay, maybe hit the 90% mark. And when the market breadth hit about 90+%, then this is where you want to be careful already, because this tells you that the market, it is like, very overbought. Okay, you want to be careful. If you have profit, okay, liquidate some of your position, take some profit. So as of now, I think still got potential to go a little bit higher, right, before we have a correction. Of course, the correction, is it really a correction or is it a real crash, bear market crash? Nobody knows. Okay, but we shall see. But my personal take is that it could be a correction. Okay, a small correction. And if you look at certain industry, if you look at certain sectors, For example, like industrial sector. All right, industrial. Recently, the XLI, the industrial sector, is performing very well. Okay, performing very well. All right, so like if you draw a horizontal line over here, you can see that it is almost near the top already. So certain stocks, it is quite topish. So you might want to take note of that. If you have profit, okay, to take your profit. Okay. So you can see over here previously, before the Market Insights Virtual Summit started, okay, I think a few weeks back, I mentioned that the industrial, all right, from the 4th of October to the 29th of November, which is until the end of the month, typically it is a bullish month, all right. Insurance, finance, also bullish month, okay. Transport, water resources, the one that I mentioned, it is pretty okay. All right. I'm not sure how many of you caught it, but I hope for those who follow, okay, I hope you guys make some decent profit. Okay. So as of now, what are some of the trade ideas that I can give you? All right. So let me give me some more, maybe about 10 minutes. Okay, I'll share with you some of the trade ideas. Who wants to listen? Who wants to know? Okay. Who wants to know? Okay, so I don't want to waste your time now. Okay, let me just share with you. Okay, and as I mentioned, a lot of sectors, industry, typically in October, November, and December they are generally bullish lah. They are generally bullish. Okay, I'm just going to list down certain things. Okay, certain sectors that I think pretty interesting. Okay, pretty interesting. So one thing is this semicon. This is SMH. All right, SMH. Okay, from 11/11, that is today, until the 30th of November. All right. Okay, 90% of the time. Okay, of the 10 years, it is positive, which means that out of 10 years, 9 years is positive. All right. If you take a look at semicon. SMH. This is magnet semicon ETF. It is actually not too bad, right? You can see this is not too bad. Okay, it is not too bad, performing very well. And I know some of my friends actually they got into semicon now. Okay, not me, I didn't get into that, but some of my friends did. Okay, so you can see the overall, it's in a downtrend, and starting November this month, it started to go higher. Again, I'm not asking you to buy right now. I repeat, I am not asking you to buy right now. Okay, right now, typically this is not my entry setup. Okay, this is not my setup. Normally, I don't like to chase. I don't like to chase. So I wait for a pullback, a trigger, a wash and rinse, whatever it is. I would prefer to see a pullback. Okay, then I see whether I can enter or not. So I'm just telling you, okay, what is moving, what could be moving in the month of November. Okay, the actual trigger, the actual entry still have to depend on yourself and also the price action also. All right. If that is clear, all right, just type clear in the comments. Okay, entertain me, so that I know that you guys understood what I'm trying to say. All right. Another one is, okay, typically, okay, in November, especially in December, okay, the financial sector is also a good month for the finance sector. So XLF, all right, XLF, XLF, RYT, these are the financial ETF sector over here. Same, 11 to about 29 of November. Again, it's 90%, 10 years. Okay, it is the same. Okay, it is the same. Okay, XLF. All right, and then this is cloud computing. Okay, so again, 11 November to about end of the month, 29. So this is also performing out of the past 10 years, 9 years. It is positive. All right. Okay, can take a look at cloud computing. All right, SKYY. Okay, not exactly the strongest right now, but potentially I think it can go higher. Okay, so we shall see how it goes. And for the financial sector, it is already moving already. XLF is really moving already. Okay, very strong. Can you see that? Price broke above the central, price broke above the cloud, tested the central pivot range, and then go higher. Again, if you buy right now, you are chasing the market. So hold your horses first. Don't chase. Okay? I'm just telling you that what is moving. So wait for the entry to go in. Okay. So cloud computing, and then home construction. Okay, PKB or ITB also can. PKB. ITB. All right. So again, PKB is from 14th of November to about 29th of November. Same. Of the 10 years, 90% it is positive. So you can take a look at PKB. All right. PKB wise, PKB. PKB sounds like I'm scolding people. Don't KB lah. Okay. PKB. All right. PKB. See, also pretty strong. Right. Pretty strong. All right. So do take note. Yeah, Lauren said, yes, that's why I say don't buy now. I'm just telling you to watch. Keep them in your watch list. Keep them in your watch list. I repeat, keep them in your watch list. Okay. Certain ETF that ran already, don't chase. Keep them in your watch list. I do not need to say how many times. Don't chase. I'm just telling you what's moving. All right. And okay, interesting thing is, as previously I mentioned about the treasury bonds, right? So treasury bonds, okay. The treasury bonds, the TLT is the 30 years treasury bonds, right? Which means that if it has capitulated, which means there's a potential chance that you reverse, right? And when it reverse, okay, the yield will go down, right? And coupled with the seasonals, okay, TLT, all right, 20 years plus treasury bonds, TLT, all right, from the 14th of November, all right, to 28th of November, all right, for the past 19 years, okay, 95% of the time, it is positive, will go higher. So there is a good chance, okay, I think that, watch the price action that TLT, treasury bonds, could go higher. And if the bonds market goes higher, okay, this in turn will, boost the equities market as well, because the yield go down. All right. Can? All right. Can? And this is the treasury bonds. Another one that I'm going to share with you guys is actually the grains. All right. The soybean. All right, soybean. Okay. 14th of November until 6th of January. Okay. 14th of November until 6th of January. All right. So out of the past 14 years, okay, 93% of the time, okay, it is positive, which means that 13 years it is positive lah. All right. Corn jargon on 17 November, all right, to 13th of December, all right. Out of the past 11 years, 91% of the time it is positive, which means that out of the past 11 years, 10 years, it is positive. All right. So let's take a look at soybean first. Soybean. Of course, commodity, some of you might not trade this, just sharing with you. So for soybean, actually I'm to long today, soybean. Looks pretty okay to me. All right. Soybean, yes. Okay. So right now it is in a consolidation phase over here. Looks promising to me. And corn is the weaker one. Corn is the weaker one, but it seems like it is hitting support right now. So personally, I'll prefer soybean to corn. Of course, you ask me, hey, Alex, how do I trade soybean or corn? No, I don't trade futures and such. There are ETF. The ETF is actually SOYB, 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 and the corn ETF is just corn ETF lah. And of course, if you don't want to trade the ETF, you can use CFD to trade. For example, IG, they do have all these futures CFD to trade as well. So it's up to you to decide what to trade. And Wang is asking, right, how about gold, silver? Gold, silver already started to run. Typically, okay, end of November, December, the metals will start to run. But because recently, okay, the dollar start to go down, okay, and because the metals are priced in USD, okay, when the dollar go down, okay, all the metals will go up. The prices will kind of appreciate, okay, which started to show already. For example, like copper, started to run already, and like gold, silver, all these running also. Okay, running also. So I'm bullish on some of the commodities. Okay, again, whether all these rises in commodities will cause the inflation to go up again. Okay, this is, I think, I don't know how to say. I have to monitor the price action again. But generally, for gold, precious metals, and all the industrial metals, okay, end of November to December, they are based on seasonals, they are bullish. But right now, they really started to run because the dollar is going down. And personally, just to share a trade with you, personally, I also entered into platinum. Previously, I entered also platinum. I entered somewhere, not platinum. Yeah, platinum. Okay, I entered somewhere around here. Okay, somewhere around here. Okay, and then price go up. I exited already. I exited somewhere around here. Okay, I repeat. Okay, platinum, I entry somewhere around here. Okay, and exited somewhere around here. Okay, so all these metals I started to run already. So I give you already a few trade ideas already. So the metals, of November, typically start to season shows positive bullish okay, right? Okay. So these are the things that I'm sharing with you to try. This doesn't mean that you need to go long right now. Just keep them in your watch list. Keep them in your watch. Understand? Ken? If you understand, just type W. Keep them in your watch list. All right. So I think yeah, we are into the 1 hour 25 minutes mark today. Way past my usual sharing really. Okay. All right. So I think that is all for today. Any question, any last question, 1 or 2 questions before I end the session? Any last few questions before I end the session? I think it's been more than 2 weeks since I last did Facebook Live. So feels a bit weird. So I must be consistent to get the flow going. All right. So no question. So I hope you guys get value from this session. Once again, give me some support, give me some like. If you find some value from this session, just give me a like, share, or comment. Subscribe to our YouTube channel. Give me a like, share, and such. If you like this session, if you find value, just type value in the comments. So Darius is asking, right? For US market, is it now too high to enter? Okay. For me personally, I think a bit high to enter. I have a few positions, but I already have this position on hand already. So if you're asking me to go long, okay, right now, I won't be buying the indices right now. Okay? I won't be buying indices. I will be looking at specific stocks to buy, okay? Indices, I already long previously before. I didn't exited. So if you ask me to buy now, I think based on the indices, it can not the best price to buy. Of course, if you ask me, can the market go higher? Yes, it can, but you are increasing your risk, okay? Because you're already chasing already. Market up 5% yesterday, that kind of. So you're already chasing already. And if you look at the market breadth, okay, there might be still some room to go. But if you're looking to swing trade, then you might need to fast in, fast out. Don't expect price to go. Don't expect price to go like that all the way Price, there's a potential that price can still go like that or can still go like that. So you must be happy with your profit if it goes a little bit higher. Okay, I hope that answer your question. All right. Okay, so thank you guys for the comments. Okay, so how you set VVIX over VIX in the trading view? All right, so VVIX, okay, it is in the trading view. Okay, just search for VVIX, you will find. All right, then slash, okay, VIX. Okay, the ratio already. Okay, can. Okay, so I think with that, I think thank you so much for you guys tuning in to this Facebook Live. I hope you guys enjoy this session and enjoy and find value in this session. Give me a like, share, comments. And with that, I wish you guys a very good weekend. Wish you a good weekend ahead, a good Saturday and Sunday ahead. And I will see you guys again next week. Okay? All right. Manfred is asking, are you the bear proud in investing? No, I'm not. I'm Alex Yeo from MarketWise Asia. Okay, thank you so much. 再见，晚安 and bye bye.